Yo, what is going on YouTube? It is your boy Zach bringing you guys another video, and in this video it's going to be day one of this little series that I'm doing on YouTube about educational content with trading. And today we're going to be talking about candle structures. I believe this is a great video to start out with because candle structures is honestly the most important confluence, and it's the first thing you should understand within trading, and that's why I want to make this video first. But if you guys enjoyed this video, make sure you guys drop a like, drop a comment what type of videos you guys want to see on this channel, and also join the free trading community down below. Without further ado, let's get right into it. So the importance of candle structures. Why would a day trader need to understand candle structures? And it's pretty simple. It helps you understand context, market structure, and order flow. And if you can understand these three aspects of trading, it's just going to improve your win rate by a lot. So that's why I'm starting out with this video, because this basically gives you your daily biases, understanding candle structures, and it tells you where you want to go on the higher time frame. But other than that, it helps with understanding risk management, where to put your stop loss, where to put your take profit, where market will most likely want to draw to next, and it helps you just build a strategy around candle structures. The basics of candle structures is an open, low, high close creates a bullish candle, an open, high, low close creates a bearish candle. And I'm going to be getting right into that in a moment. Okay, so here is the different type of candles. A bullish candle shows buyers are in control. A bearish candle shows sellers are in control. A doji candle is a potential sign for a reversal. And a rejection candle is a reversal, pretty much. And the difference between a doji candle and a rejection candle is, you guys can see right here, the wicks with the doji candle, it's pretty much equal, and it just shows very indecisiveness. And this is typically where accumulation happens. With the rejection candle, it's a lot more clear that we're going to reverse with the massive wicks. So the anatomy of candles, this is very simple and very straightforward, and I'm going to get into the AMD model in a little bit. But this is basically the AMD model within each candle. So with a bullish candle, you want to see an open, low, high, close. And with the bearish candle, you want to see an open, high, low, close. And this happens on all time frames. The candles move the exact same every single day. And between every single candle, there is going to be the open, low, high, close, or the open, high, low, close. So every single candle has this inside, no matter what type of candle it is. So this is the difference between a bullish trend versus a bearish trend. A bullish trend is obviously trending higher because it's bullish, making higher highs and higher lows. As you guys can see right here, higher high, higher low, higher high, higher low, higher high, higher low. Just continue it up, keep breaking structure above here, broke structure above here, just keep trending up. Versus a bearish trend where price is obviously moving lower, creating lower highs and lower lows. Lower low, lower high, lower low, lower high, lower low, lower high. And you guys can see right here, we just keep breaking structure lower. As a day trader, you always need to be playing with the trend. I would not want to short in a bullish trend on the higher time frame. I would not want to long in a bearish trend on the higher time frame. So you need to understand which trend we're in and how to play with that trend. So understanding AMD is very, very important. And AMD happens on all time frames. The A stands for accumulation, M stands for manipulation, and D stands for distribution. And higher time frame holds higher power, but within every single candle, there is an AMD model. And understanding this AMD model will help you understand what is sponsoring your move. Why should we go higher? Why should we go lower? And this will help you build conviction within your execution. If you guys can understand the manipulation leg, then you guys can catch the distribution, which is how I typically like trading. I don't like catching the manipulation. I like catching the distribution because you're going to get the highest RR on that trade. And this happens, like I said, on all time frames, and within every single candle, there's going to be an AMD model. So as you guys can see here, this is a bullish candle. We open, we manipulate lower, taking people's stop losses, and then we're going to distribute higher, and we're going to close back into that range. For a bearish example here, we're going to open, accumulate for a little bit, then we're going to open higher, manipulate lower, and close back into the range. So if you guys understand this, this is really what's going to make you profitable, honestly, is the AMD model. When using AMD, it all comes down to time. You need to base your trades around time. 10 a.m. is when you're typically going to see a manipulation leg because that's the open of a 4-hour candle. Same with all of these. 10 p.m. you're going to see a manipulation leg first because that's the open of another 4-hour candle. 2 p.m. and 2 a.m. same thing. It's the open of a 4-hour candle, and 4-hour is the highest time frame. So if you guys are trading, you guys want to utilize these times to determine the manipulation leg. Okay, so here I'm going to be explaining a weekly AMD. Weekly is the highest time frame AMD, and typically it'll tell you where you want to go on the day, and then you guys scale down to the lower time frames and find AMD within those lower time frames. But right here, you guys can see on the weekly time frame, I'm coming into the week bearish because of this previous bearish candle inversing a new week opening gap. We never came to any type of pre-array, so I'm just going to be overall bearish coming into the week. But if I'm bearish on the week, what do I need to see? I need to see manipulation higher, and then I want to catch a distribution. So coming into Monday, I'm going to be very, very bullish just based off the weekly AMD. You guys could see here, Monday opened higher, manipulating up. We never manipulated it into a key level though. It needs to manipulate into a key level, and that will be true manipulation. So the manipulation leg is not over yet. Tuesday is going to be another accumulation day, as you guys can see right here. Sort of just stuck in between this range. These are typically days you want to stay away from. And then Wednesday, we have the true manipulation. We came up inside a key level. We put in an SMT. SMT is a whole nother confluence I'll go over in a future video. But that gives me the true manipulation. And as you guys can see here, Wednesday opened higher, and then we came down in low close open on the daily. This is the Wednesday candle right here. Open high into a key level, putting in SMT, low close. And it happens on all time frames. Open, Wednesday, open high, low close. So Thursday, I'm expecting a move lower. And Thursdays are typically expansion days, just based off the weekly time frame. So this would be a great look for shorts coming into Thursday, and these are the type of days that you want to hold your runners because they're expansion days and they move the most, typically on Thursday. But for example, this could be Monday could accumulate, Tuesday manipulate, Wednesday expand, Thursday come back into the range, and then Friday typically closes back into the range. But you need to it all depends on where we are in price. And just this example, Monday is manipulating, Tuesday accumulates, and then we have that manipulation leg again, giving you the true manipulation. And then Thursday, we distributed lower. And then Friday, we took out our key sell side, which means we're going to close back into the range then, which you guys can see here, we closed up. So understanding the weekly time frame and understand the weekly model, you guys can see here, if I go to here, this candle is actually already set to the weekly. So this is the weekly candle here. We opened right here on Monday. Right here's open. We opened high, put in that manipulation inside a key level. And remember, the manipulation always needs to be inside a key level, or else it's not true manipulation. That's why we wouldn't have looked for shorts inside Tuesday, because we never swept or tapped into a higher time frame PD array, a higher time frame fair value gap. And we do have an SFT here, so we probably tapped into here on ES here. And then we got that expansion low, touched the sell side liquidity where our draw was on the week, previous week low, as you guys can see right here. This is also previous week low, which is a good target. And then Friday, we closed back into the range. So understanding this on the weekly time frame is really what's going to give you where market wants to go on the day. And also, you guys can see right here, we have low resistance right here. So as soon as we broke through this, we're obviously just bearish to new week opening gap and previous sell side, which is previous week low. So understanding that will help you understand where we want to go on the higher time frames, and then we drop down to the lower time frames. So right here, as you guys can see, on Wednesday, we manipulated higher, put in that SMT, and then we had a massive sell-off pre-market. So what did I say about time? 10 a.m. is a open of a new 4-hour candle. So we want to see 10 a.m. open higher into a key level, which was this massive 15-minute. And then we got that low, close back into the range right here. So open 10 a.m., open, high, low, close. And then for Thursday, the same thing happens. You guys could see, go to 10 a.m. We're obviously bearish now. We broke all this trend line liquidity. The only really target is new week opening gap. But before we want to see lower, we want to see 10 a.m. open high, low, and the close will be at 2 p.m. It would be right here, how we come back and close. So you guys could see that we tapped into a higher time frame Pediarite. We always want to manipulate into a higher time frame Pediarite and then get that expansion, and we would have caught some sort of inversion probably within here. Our entry model would have been off this 5-minute or 3-minute maybe. Would be off like a 3-minute inversion in here, and you take shorts to new week opening gap or lower. You just take it lower. But AMD happens on all time frames, and you have to go from highest time frame and then you drop down to the 4-hour, and you could find a 4-hour AMD. Also, I recommend every single one of you guys to have this indicator on from 2 degrees, higher time frame power 3, and then you want to come here and set it to the 4-hour. This will help you understand AMD without clicking through time frames. It'll be right to the right. You can put the offset a little up if you need it more to the right, like this. I'll move it to the right a little more. So this is a great indicator to use while trading. So I just wanted to give you guys that as well. And yeah. Last thing I want to talk about in this video is the trends one more time. So when we are in a bullish trend, you want to see bullish PD arrays being respected and bearish PD arrays being disrespected. That's also how you identify certain trends, and that's if we're in a bullish trend. And if we're in a bearish trend, you want to see bearish PD arrays being respected and bullish PD arrays being disrespected. So as you guys can see here, there would be a fair value gap here being respected, and then there would be a bearish fair value gap right in here that gets disrespected. And we always want to see if we are in a bullish trend, we typically, as I want to see bearish PD arrays be disrespected, and there's where could my entries be, and we target some sort of external draw or low-hanging fruit. And the way you determine the flip of the trend is when we get a flip, pretty much. We get bullish PD arrays start to get disrespected and bearish PD arrays start to get respected. So I'd flip the trend here and pretend this is like connected to here, get connected here, right here. Just make it like this. You would see bearish PD arrays start to get respected and then bullish PD arrays be disrespected. So if I was bearish on the day, I'd want to take an inversion off a bullish fair value gap being disrespected. Make sense? Makes sense. So some of the key takeaways from this video. AMD happens on all time frames. Higher time frame holds higher power. True manipulation needs to be inside a key level, and that's typically when we want to see some sort of reversal, when we want to see that change in the trend, and you always want to be trading with the trend. I should write that down as well. Another key takeaway is trade with the trend. You do not want to be taking shorts if we're in a bullish trend, because that's just a rebalance. Until we get that change in state, that market structure shift, then you could start looking for shorts if we were in a bullish trend. But you just want to trade with the trend overall, because I've lost so many trades trying to take a rebalanced trade to a key level, because sometimes it could just manipulate you and it's just not going to work. So you just want to trade with the trend overall, and you always want to trade that distribution leg. And also AMD, it helps you determine daily bias and your entry model. So that's going to be it for this video. If you guys enjoyed this video, make sure you guys drop a like, drop a comment. If you guys have any questions, join the Discord down below, and I will see you guys in the next educational video. Peace.